really this is a very important year for Talisker, just as important as last year was, as we made the all-successful transition from explorer through developer into producer at the Braylorn Gold Mine. Any of you who might be from British Columbia will know of the Braylorn Gold Mine. It's one of the largest and longest producing, highest grade gold mines in Western Canada. Produced 4.2 million ounces over 40 years at an average recovered grade of 17.7 grams per tonne. Our vision as a company is very straightforward. We want to become a multi-mine gold producer by developing district-scale gold belts, leading to the production of more than 200,000 ounces of gold annually. We're well underway here with our first mine, the Mustang mine, going into production last year, heading towards that target by 2028 of 100,000 ounces. And we're in the planning phases of our second mine, the Olympus mine, about 2.5 kilometres from Mustang, that will then ramp up to be able to produce this other 100,000 ounces to achieve our vision. Our mission is to achieve this vision within the next 5 years. Having a look at our share structure and market capitalisation, this will change as Don has mentioned. We've just finalised, we'll be finalising a bought deal for over $50 million that basically puts us in the position to be unconstrained with our plan. Currently here we've got about $32 million in cash, so that will lead to about $80 million. A minimal amount of debt. This is related to a gold-linked note that we did during the hard times. We'll be cleaning that up very soon. The share price and stock performance looks very interesting. You'll see the big jump there is when we announced our first production, and a 6 or 7 times growth in the share price in the last 12 months. But this is just the beginning of the pathway that we'll be completing over the next 5 years, and we expect multiple re-rates as we reach each of our production targets. Shareholder breakdown, roughly 50-50 between institutional shareholders and retail shareholders. Some very good, solid, long-term institutional shareholders, led by Franklin Templeton at 9.9, Harbort Partners also at 9.9, the Phoenix Gold Fund from Singapore at 9.9, and a series of other very strong institutional shareholders who've been with us through this pathway. We're fortunate to be located in an excellent jurisdiction and an excellent location. Located in south central British Columbia, you can see Vancouver in the bottom left-hand corner. About 3.5 hours drive north of Vancouver. Extensive highway infrastructure, connected to grid power. In fact, about 15% of British Columbia's hydroelectricity comes out of the valley where we're located. Our initial strategy and our ability to get the project into production very quickly was innovative. We looked at ore purchase, we looked at toll milling agreements, one of the first groups in British Columbia to do this. And we've heard from Brad here following a very similar path. We've finalised a long-term, large-scale direct shipping agreement with Ocean Partners to be able to ship and mill up to 1,500 tonnes per day from our Braylorn project. We're fortunate to be able to operate all year round. We're in the rain shadow or the snow shadow of the Whistler Central Coastal Range. So only get about a foot to 2 feet of snow per year. So a very good operating environment, great access to a skilled workforce, not just out of Vancouver, but out of the mining hubs of Kamloops and Kelowna. 2026, a very strong foundational year for us as we build the platform, the base of the pyramid, to ramp up to 100 and then 200,000 ounces of annual production. This year, a lot of drilling. Initially 30,000 metres, we're increasing that. We're going to double that drilling. mostly resource conversion, both at the Mustang area and also at the Braylorn West, a new area that we're developing to right now. Significant amount of development, access on 3 ramps, 4x4 ramps, to give us a lot of access in the coming years. Lateral development or in-vein horizontal development, nearly 5 kilometres of lateral development this year, 3 kilometres of in-ore development or lateral development that pays for itself. We'll mine in total about 70,000 tonnes this year. We're in the ramp-up phase, starting off at about 200 tonnes per day, expecting to reach 500 tonnes per day by third quarter of this year. We're implementing very innovative ore sorting technology. It's a laser-based system that uses our magical AI that we hear about every day. This is a real application to AI that allows us to remove a lot of our waste material. We expect to remove about 40 to 50% of our waste material. This reduces our trucking and milling cost, but also increases our grade. We see our grade and expect it to increase by 80 to 100%. Our indicated grade is nearly 9 grams per tonne, and we expect to be trucking material that's between 16 and 20 grams per tonne, making us the highest grade gold producer in Canada. A large milestone coming out this year is our resource update in PEA. This will be incorporating about 28,000 additional underground drift samples, 30,000 metres of additional diamond drilling. We'll be bringing in 18 new wireframes, and we'll see a significant resource update of between 800,000 and 1 million ounces, giving us 2.5 to 3 million ounces of global resource. This will also provide an independent valuation of our actual economics for both the Mustang and our new mine, the Olympus mine, that's based on our mining, trucking and milling costs that we're actually doing right now. So we're very strongly positioned for growth over the next 5 years. But I'd like to discuss what we've done over the last 5 years. Nearly 200,000 metres of diamond drilling. Completed our initial maiden resource estimate, just under 1.7 million ounces. Completed our mine design, our permit amendments, portal and decline construction, secured all our key financing to go into production, finalised our First Nation production agreements, milling agreement, and produced our first gold, all within 5 years. So I want to make it very clear that Talisker Resources is a company that delivers on its promises, and we've delivered each of the milestones that we've promised to the market over the last 5 years, and are confident that the next 5 years we'll be able to deliver what I'm presenting to you right now. 2026, our PEA and resource update, ramping Mustang up to 500 tonnes per day by third quarter of this year. Implementation of our ore sorter with a really large impact on our economics. Starting the scoping of our second mine, the Olympus mine, that'll be included in the PEA, and looking to develop 10 to 15 years mine life at both mines at 100,000 ounces per year. We'll also look to engineer our on-site mill. We went with off-site milling, ore sale and toll milling to get into production quickly, generate cash flow and revenue very quickly with a very low capex. We want to use this revenue and cash flow to be able to fund the development of our second mine and develop our mill using this cash flow. 27, we'll be submitting the permit for our mill and our new mine. Finish our resource conversion at Olympus, ramping Mustang up to 750, and the scoping of our third mine, the Olympus mine, about 10 kilometres to the north of Mustang. 28, we'll be initiating our mill construction, reaching maximal production at Mustang, 1,000 tonnes per day, portal and decline development at Olympus, with Olympus coming online in 29, and our mill as well. We'll be looking to ramp up Olympus to 100,000 ounces while we stage in our third mine, the Congress mine, in 2030 and 2031 and achieve our corporate vision of 200,000 ounces of annual production. Thank you.